G'day folks, and welcome to the very first Check on Chain Q&A session for the month of April. So thank you first and foremost for everybody who sent in questions on Substack, whether via the designated post or just along the way. What I've tried to do here is collate, there's been a series of different themes. So I've tried to pick out a handful of those key themes, and 3 of them in particular we'll dive into. Some of these we'll be able to explore in great depth. Some of them we'll just kind of touch on and go over the general ideas and how I'm thinking about things. But first of all, thank you so much for putting in those questions. It really does. It gives me a lot of ideas, right? When I can see what you guys are looking for, the types of metrics, types of questions, all of these different dynamics. It helps me structure the content to make sure you guys are getting the absolute best value that you possibly can. So thanks for your support and thanks for getting those in, and let's kick things off. Okay, so there's 5 topics I want to touch on. The first 2 I'll touch on just here, and then the other ones we'll go into a bit more of a deep dive onto. One question that I got was actually, when check on chain dark mode? And the answer is not soon, but I'm working on it. It's an infrastructure level thing, and we will get there eventually. It is in the works, but I do have a short-term fix that I've been using. So you can or cannot use that, but I've certainly found it just a plug into the browser that works really, really well. Metric explainers. There was a question about, okay, there's some of these different tools and I can't quite get my head around it. I'm working on it and the content's good to get there, but obviously there is a hurdle rate, right? And in many ways, that's part of the thesis of Check on Chain, is that there is a hurdle rate to really understanding these metrics. And what I'm trying to do is at least help people navigate and get your head around and just slowly but surely work through it. So you may have noticed this week we did a realized cap and MVRV explainer video. Expect more of those. This is actually where Check on Chain, the original idea, came from, as the Onchain masterclass. So this is something I've been very passionate about, and I will be making more of those explainers almost from a ground level up, and eventually that will start to look like a course. So keeping things fairly high level, not getting too into the weeds, but at the same time helping you guys understand the key metrics that I pay attention to, just so you've got that background information. And I think the big takeaway here, you may not understand what these metrics do straight away, but with time and repetition, it will get easier, right? As you start to see how I use these tools, they're generally all speaking a similar language. And over time, I think that the dots will start to connect. So that's a work in progress, but something to look forward to in future weeks. Okay, so some of the other topics we're going to talk about, I've actually flipped the first 2. We're going to look at the ETFs and the impact on demand, including the new ones coming out in Hong Kong. We're going to have a look at on-chain on micro versus macro. There's a lot of questions about how we actually consider on-chain data on a more trading level framework, but then also looking at things in terms of, broad picture. I'm a hodler. I've been around for 1 or 2 cycles. I kind of want to make this cycle count. So how do you actually distinguish those 2? And then there's another one here, which is a very common question. It's probably the question that everybody has. Tools that I'm using to track market cycles, and in particular, how do I know when we're starting to get close to a top? The answer is I don't know, but I'm going to try and get as close as we can by looking at the underlying mechanics. Anyway, let's get stuck into it. Okay, so the first couple of questions was about the ETFs. There was one here from Bob talking about, do I think there's going to be an outflow from US into Hong Kong ETFs, which I believe go live this week. High level, I don't think so. I actually think these Hong Kong ETFs, first things first, they are a net demand, right? Because you are seeing it just is like an API into Bitcoin for traditional finance. So I don't think it's going to be negative for the overall demand, but I also don't think it's going to blow anyone's socks off. I think the Hong Kong market is just much, much smaller. I don't have the exact numbers to it, but I have seen the likes of Eric Balkunis and James Seyfarth, who are kind of the Bloomberg experts on ETFs. There's single small cap companies in the US that are, as big as the Hong Kong ETF market. So I don't think it's going to change anything, but it's obviously not a net negative, right? It is showing at a level of acceptance, and it's growing up, right? So all these things are net positive. There was another question about halving scarcity, and with these ETFs, are we likely to get early Epoch price action? I'll actually show you a chart to just try and describe this. I don't think we're going to get like 2013 price action. I think that's probably a thing for the past. Bitcoin is just much bigger, but we'll touch on that in a couple of charts. And in a very similar vein, there's a lot of noise last cycle about diminishing returns and volatility. Are we going to have a smaller bull? Are we going to have diminishing returns, a milder bear? I've got some charts for that as well. So let's actually just jump into those and really answer those last 2 questions about halvings, cycle performance, general price performance overall. Okay, so just before we get started, here up in the top here, this is the dark mode thing I've been using called Dark Reader, and it seems to do a very, very good job, particularly if you check on chain. Now, again, it's going to take me some time because I'm not a web dev. I've got to go through that whole process of working out how I get dark mode going. So infrastructure is working on it, but I'm not expecting anytime soon. So that's my current temporary fix, but it seems to work quite well. Now, there was another question that I got along the week, which is it's a bit challenging to follow the analysis, and I want to have the charts at the same time. Same story. Eventually, we will fix the navigation of Check on Chain. It's just going to take us a little while to spin everything up and make that happen. So let's talk about ETFs. And sorry, just on that last point, the reason why I actually want to show you where I actually find stuff is to try and help that second point, right? So you know where I'm going looking for these certain tools. So we're looking at ETFs, we're looking at cycle performance, we're looking at how it's kind of, changed over time. So what I'm going to do is just go down to our pricing and volatility, technical analysis and volatility. First thing I want to do is load up the cycle low chart. I also want to look at the quarterly, monthly, and weekly return on investment. This is basically looking at performance over different times. And then what I think is my favorite chart, this bull dips chart, one that I go to all the time and you'll see me refer to on a regular basis. So these ETFs, we've talked about the demand. We've kind of seen how that's flowed in. It has been extraordinary. It's been remarkable. If we think about what's the actual net impact, right? People say we went to an all-time high before the halving. That makes this a different cycle. I like this chart. It shows us the early epochs. Here's the Genesis to 2011 bull. Here's the 2011 through to 2013 peak. And you can see that they were just rip-roaringly different, right? We were talking about a much, much smaller asset, right? Sub $1 billion. It's a different world back here. And what we can do, let me just turn those off because I think they probably cloud our judgment a little bit. If we now look at the previous two cycles, 2016 is in green, 2021 and 2018 through to 2021 is in blue, and our current cycle is here in white. And at least to my eye, it is remarkable how much we're in the same ballpark. Now, granted, this is on a log scale, right? So it can be a little bit deceiving, right? We're looking at a 3x here from the low versus a 4x. We're talking about 100% in terms of price performance there. Nevertheless, following a relatively similar trajectory. Now, with these ETFs, something else that's probably just worth noting, I might just pull up this next chart because I actually just want the price chart for this. I'm going to take this curve away. For the price chart, something that I've been playing around with is how different are these ETFs, just generally speaking. And the conclusion that I've started to come to is we've kind of seen this movie twice before. Back over here in 2018, in the 2019 miniature bull, there was a miniature ETF going on. Now, it wasn't your normal ETF. It was actually called the Plus Token Ponzi scheme. And this was I believe it was over in China. It absorbed like 1% to 2% of all Bitcoin during this process. At the same time, BitMEX was the primary derivatives exchange, and loads of people were shorting this thing into oblivion, thinking we were never going to break this $6,000 price floor straight away, and we zipped straight through it. So huge amount of spot demand through this zone. If we look at the 2020 cycle into 2021, this was GBTC seeing all those inflows, 660,000 Bitcoin in about 4 months. And the moment the GBTC went from a premium to a discount, the Widowmaker trade, we essentially topped out and the bear market was essentially a large hangover from that. Now in our current cycle, we've got the same thing. Rather than GBTC being on the inflow, it's kind of part of that sell side. And we've talked about that. It's very similar to long-term supply. But if we look at our current market cycle, we've actually kind of seen this movie, these like very heavy spot-driven demand vectors. We've actually seen this movie before. And I think it's actually remarkably similar when I kind of contemplate and think about it from that lens. That's probably the way that I would be considering these things. Now, one last thing just to talk about the early epochs. What we're looking at in this price chart, so ignore all the dashed lines. It's the area charts that we really care about. This is the quarterly ROI in orange. In blue, we've got the monthly ROI, so literally like monthly price performance rolling. And then in the red, we've got weekly. Now, weekly, I'm not too fussed about because we're looking at this on a macro scale. This is the early epochs, right? These are just, over 600% returns over the course of a quarter. Pretty hard to get to those levels, I think. I think that there's just more scale, more size. with these ETFs, when price goes up, people are going to divest. I think this is going to happen just to balance portfolios, and this will only continue to mature. But if I look at our current price performance, we're getting quarters where we're getting 60, 70, 75%. This is actually not too dissimilar to what we saw back here in 2016. And if you've been following my analysis for a while, I actually think 2016 has a lot of similarities to our current market cycle. I think it's spot driven primarily, which is much like the 2019 era. It's much like the 2021 era, but we haven't seen this kind of explosive upside. In many ways, price action through this whole bull market since the FTX lows has been what I would call structured and pretty orderly. Now, this has been my favorite chart for this entire cycle. I just absolutely love how easy it is for people to understand what's going on here. We've got our index price only for the uptrends in this bottom section here. Now, in theory, you can see these kind of diminishing return profiles. So far, that seems to be the case. But I also just note the drawdowns from wherever we are in the cycle. What's the cycle high? The drawdowns, we are struggling to get a 20% drawdown. Now, I don't know about your timeline, but my timeline is remarkably bearish for a market that we just haven't seen a 20% correction. I actually would be very, very in favor of seeing more downside, because I think a correction lower actually just resets and flushes and gets investors' expectations away from moon math, brings it back to reality, and just reminds people that chop and markets are just not an ATM. They are going to take time, and patience is the hardest thing to actually master in a market. But the structure of this thing, right? This is the follow-on from Plus Token. We had a huge amount of sell-off, and then we also had March 2020, so a real kind of wacky cycle back here. The scale of the drawdowns that we saw back here as well, massive in terms of, price, but of course it's volatile in both directions. This structure is very much similar to 2016, 2017. It feels a lot more like a spot-driven, there's support under the market. To me, I think this chart tells a really, really powerful story. I would love to see a further correction, but we haven't seen it yet. And I think that's something to just keep in mind. It's something I keep coming back to. So by and large, in terms of like cycle performance, to me, it actually feels really, really robust, really strong. And in many ways, it's kind of following a similar trajectory. So it's kind of remarkable how Bitcoin just continues to trade like this. Now, just before we move on from the ETF side, ETF flows in USD, I want to bring this in. One more thing that I just wanted to highlight, and actually we've got a bit of a change to this, this thesis today. What we're looking at here is the ETF flows in USD, but only looking at the, excluding GBTC, which has more or less been just structural sell side. It's kind of the hangover from 2022. GBTC also contains arbitrage traders, who I think most of them would have probably closed their positions now, who were gapping up that discount until it became an ETF. You've got people who are just, they see it as a toxic investment. They went through the whole cycle down and all that stuff. Pretty hard to hold on to that kind of an asset. And furthermore, if you were an investor who held GBTC, maybe you own some IBIT or FBTC, maybe you also hold spot, I would hazard a guess that as the market rallies and goes towards the top eventually, people are probably going to liquidate their GBTC first. So it's kind of the preferred sell side instrument for people who hold it. That would be my gut instinct. If they're waiting to buy back in, they'd probably buy back into a different ETF. I don't think many people are going to be buying into GBTC. So let's turn off GBTC. There was a lot of talk just a couple of weeks ago about when we get a correction, and we are 20% down at the lows. When we get a correction, we're going to see a net reversal, and it's going to be just net outflows from these ETFs. Now, we've had a couple of days here and there, and actually you can see that closing the week, we actually had a couple of outflows from these ETFs, and the IBIT has actually stopped its inflow streak of like 71 days, which is amazing just on face value. But I'm not yet seeing, this is something I'm actually going to be paying attention to moving forward. I'm not yet seeing the fabled outflows. To me, it's fairly structured and orderly at this point in time. It feels like there might be more diamond hands inside this who are actually along for the ride than was first anticipated. So it doesn't feel like this is just full of arbitrage traders. I think a lot of those folks would have probably exited by now. But that said, this is certainly one that I'm going to be paying attention to moving forward. I do check this pretty much every day because so go the ETF market. It's somewhere between 30 and 40% of the rest of the market. It makes sense to me to just pay attention to this as a, as a pretty meaningful source of demand and therefore supply. GBTC continues to be structural sell side, but given all of this, the fact that this is our drawdown profile, I really think speaks to something underneath this that is fairly patient and willing to just absorb. That's my big picture takeaway when I look at all those charts. And I have one more chart. Sorry, I bounce around here. These Q&As are going to be a little bit more loose, just as I kind of wrap my head around things. And as I'm talking through, I'll come up with different ideas. The other one that I want to show you is this realized volatility profile. So part of the question was, are we seeing diminishing returns, which so far it actually looks very similar to previous cycles. Are we seeing a smaller bull? Well, so far it looks pretty similar to previous cycles, so not yet would be my argument there. And in terms of volatility, we're seeing lower volatility, lower drawdowns. Well, we have seen lower drawdowns, actually. And in terms of the volatility, what we're looking at here is realized vol. I've only got 3 months to 1 year, so long time frame realized volatility. If we look at the 2017 cycle, 135%, 112%, 100%. So we're talking about 100 to 130% realized vol. If we go to our 2021 cycle, 82, 93, 70, we got down to 37, 30%, 35 at the lows. But here we are at 60%, 53%, and 46%. So just measuring to the 2017 or even here in 2021, we are substantially lower, right? We're something on the order of 50%, 40% lower than where we were, which is, we are seeing diminishing or slowing down of volatility. Now, one other thing is that volatility in Bitcoin, this is actually the opposite to stocks. Generally speaking, if you look at something like the VIX index will spike during sell-offs. And when the market goes back to that kind of stair-stepping crawl higher, volatility actually compresses. Bitcoin is a bit of a unique beast in that it puts things in the other direction. We actually see declining volatility through the bear market and usually into the first part of the recovery, declining through the bear market and then into the first part of the recovery here in October. Bitcoin tends to see more volatility to the upside. And this is why things like the Sharpe ratio, Sortino ratio, risk-adjusted returns, yes, it's more volatile, but you actually get rewarded for that volatility. Generally speaking, in an upwards direction. This is what the data tends to show. But it is interesting that we get upside is actually where Bitcoin sees its volatility profile spike, and actually less so in terms of the downside. We actually see it compress, and the market kind of goes to a hodler only market. There's less trading, less volatility, and that's kind of what puts in the floor and lets us move on from there. Okay, so the second set of questions was looking more about the metrics and actionability, and I'll put this into two different buckets. There's a question of how we actually use different metrics, but on a shorter time frame versus a macro time frame. But then there's another layer to this, which is in terms of the analysis that we do here at Check Onchain, who is it really suitable for? Now, the broadest audience, generally speaking, the people that most of the time, what folks are looking for is just to get a bit of a sense of where we are. And just to give you a bit of an insight, the structure of where I really want to take Check Onchain is we've used the tagline, your Bitcoin personal trainer. The idea is to help prepare people. We have no idea what the future is going to do. We don't have our working crystal ball yet. It's one of those things we're not quite sure we're going to get done. So as a result, what we want to do is look, 3 months ahead and look at the market mechanics that really explain what we're looking for. Do we have dynamics that we're concerned about, that we're constructive about? So it's really about preparing the reaction function. So, we're not training for what the result will be. We're training for how to identify the result that we care about. And this will obviously feed into the last question, which is about, how do we determine which metrics do we look at and how do we find a cycle top? Because obviously we're more interested in a cycle top than a cycle low at this point in time. But really, we're trying to be actionable in the sense of preparing us for the next 1 to 3 months. We don't know what's going to happen in that 1 to 3 months, but helping us understand what mechanics make sense. What are we seeing playing out? And do any of those make us, constructive or concerned about the road ahead? So that's the general framework that we look at. So let me jump in and have a look. I particularly want to focus on short-term SOPR and MVRV because generally speaking, short-term holder metrics are what I usually will look at to actually assess what's going on in terms of shorter-term trading mindsets. And in the next question, we'll spend a bit more time looking at the macro, but I just really wanted to address how is it supposed to be actionable? There's a couple of people who are like, this is my second cycle and I kind of want to make it count. the intention of Check on Chain is not to predict the future, but it's to try and at the least give my honest assessment of where I think we are, what I think is coming, what I'm paying attention to at least prepare for some of those eventuations, right? That's really the framework that we're looking at this from. Okay, so as I mentioned, if we're looking at cyclical or more trading type metrics, what's going on today, you'll always see me go to short-term holder, MVRV, and SOPR. There's a reason why these guys are up at the top. They are the ones that I will use by far and away more than pretty much anything else. And there's a reason for this. MVRV and SOPR, and by the way, this will come out in it. We'll do a whole series, a masterclass on these. MVRV and SOPR are actually sister metrics. MVRV is the unrealized profit or loss, in this case, held by short-term holders. SOPR is the realized profit or loss, in this case, held by short-term holders. I talk about this in terms of unspent and spent, and I've got a whole post coming out that will break this down even further. It's the framework that I use for analyzing all these metrics. All of these metrics are cross-sections of the supply in some way, shape, or form. Here we're looking at how much profit is held in the coin supply. Here we're looking at how much profit was locked in by the spending coins. Supply, volume, unrealized, realized, held, locked in. And that's why these two metrics are super powerful, because MVRV for short-term holders is telling us how in the money is the existing cohort of recent buyers. So as MVRV comes back down towards that level of 1, it is telling us that they have more or less come back to their cost basis. Now, talking about that reaction function, we often see, and there was a question about, sometimes MVRV does or doesn't find resistance. It works sometimes, works others. What we're looking for is two things. We appear to be in a pretty resilient uptrend. As a result, I would expect to see MVRV hold. You can get these undercuts, but I would expect to see MVRV hold. If it does not hold, then I have to flip my bias. So it's kind of this toolkit where you say, well, I'm expecting this right here to bounce. It clearly didn't. We came back for a retest. This is now confirmation that you've got to take your bull market goggles off. When something like this happens, you've got that reaction function. Say, okay, we've just been below this by a bit too long. We got a little bit too deep below their cost basis. We're now in top heavy mode, right? And that's why I did my very first post for Check on Chain, all about top heaviness, because that is one of the set of tools that I look at. And it's a fairly recent, let's say, set of charts that I've managed to build and display that really comfortably. But nevertheless, there's some of the mechanics that we're looking at. So short-term MVRV is the amount of profit or loss that they are in, and it's kind of the incentive. The higher that MVRV goes, the more likely someone's going to take chips off the table. Because if you get a pool of people in the room, they all say, I'm diamond hand hodling, I'm never going to sell. If they're the only coin holders and you keep ratcheting up their profit, 200%, 300%, 400, 500, at some point, some guy is going to break. And it's a bit of a game of chicken because everyone knows that at some point someone's going to break, right? If Bitcoin goes to $1 million, you got to ask yourself, what are you going to do, right? If it was $1 million tomorrow, you'd certainly consider taking some chips off the table. And a bunch of other guys actually do take chips off the table. Now, another thing that I've done here with both MVRV and SOPR, you'll note that I've color-coded the price chart. And what I'm looking for here is levels where it's just getting too hot. So again, we don't know when the top will be, but we do know that it's probably going to happen when too many people are in too much profit. So these red lines are looking at a statistical basis. When do we actually hit those levels? And we can actually calculate when they are using these pricing bands, right? Because it's going to be some multiple of the short-term holder cost basis. Don't worry if you don't fully grok all of that. We will certainly be doing MVRV and SOPR are going to be first cabs off the rank in terms of our masterclass series. So we'll get back to that. But when I wake up in the morning, short-term holder MVRV is one of the first things I'll open up. Short-term SOPR is the other one because it's one thing for everyone to be in profit. It's another thing for them to actually take it. And remember, it's the sell side taking of those profits that's actually going to overwhelm demand. If everyone's in profit and they truly are diamond-handed, there's no coins to buy. So the market can just keep powering on. But it's when you activate those guys and say, all right, they're going to start spending now. So if every single short-term holder coin was spent in the next block or in the next day, just for easy math, short-term SOPR would look exactly the same as MVRV for that moment in time, because this is the unrealized profit and loss. Everyone spends those coins. short-term SOPR would snap to that MVRV value because it's essentially you've locked in all the unrealized, it was realized, and then away we go, right? Starting a new sequence. So SOPR has many of the same characteristics, but this is really those two. I will open them up and they just tell me, right, we've had this breakdown below. That's good to see. We've had a recovery. I want to see it find support and actually start moving higher from here. Otherwise, if it starts to look something like this where we find resistance, I have to flip my bias and say, well, at the moment, maybe not full bull cycle, right? It may just be we've got to go through more correction, but it tells me that there's a bit more panic going on. People are selling their cost basis rather than buying it. So that would be a bit of a flip in the overall script. Okay, so last question, and I think I've probably touched on this this first one here. What are the metrics that I check every day? I'll show you a couple more that I keep my eye on. Again, I won't go into too many of the details, but they are really the ones that I check on a daily basis because I think they tell me a lot about what's happening, and we will cover all of those in the very near term in masterclass sessions. Does on-chain data give us any indication of what type of cycle we're likely to have this time around? We've kind of touched on this, but I want to show you one more metric on this. And then we'll do the question that I got the most, which is pretty obvious, and I'm sure I'll get it again. How do I look for the cycle top? So I'll talk through some of those dynamics. Okay, so getting started, I want to just open up on-chain originals. And there is another price chart that I will build. For those of you who saw my podcast with Pete McCormack, probably about 2 months ago or 3 months ago, maybe two, I covered a chart that's very similar to what we'll go over here. This is another one that helps me understand where we are in the cycle, just broadly speaking. I'm going to come back and look at our cycle tops and bottoms because that's one that we'll cover the top shortly on. And there was one more. I want to look at sell side risk ratio. And I want to look at, you can either look at the MVRV or the AVIV. I'm just going to stick with this one here because it's probably got the most. And in terms of things I check every morning, having since built that report from the other day on top heavy markets, I will look at these, well, maybe not so much long-term holders, but certainly short-term holders in loss and the drawdowns, which is really looking at, are we top heavy? So for those who didn't check out the report, I strongly recommend going and checking it out. Is the Bitcoin market top heavy in our Substack? First things first, it still looks much like our drawdown chart. This is looking at how much supply has fallen into a loss. And when you get these very steep declines, it means you've got lots of trapped buyers at a high cost basis. We haven't seen it yet. So this to me is, it continues to look more like this. I'm not concerned about this at this point in time, but of course that short-term holder cost base is really the one to pay attention to. If we look at it on the short-term holder framework, notice that we've got a bit of an uptick. So this has now increased meaningfully from when we wrote the report, which was actually back here somewhere, hitting that mean level. Let me just stick this onto our modern era because I think that'll tell the story just a bit better. So we've got a bit of an uptick. Now, this is telling us that we have 2.8 million BTC that have been acquired at a price above where we currently are. Now, we do have our orange level starting to flag. So you can see that orange means we're above the average for short-term holder supply and loss, but we're not above the +1 standard deviation level. +1 standard deviation is when we go red. Just remember that we have to go orange before we go red. So the fact that we have a bit of orange here, we just have to be cautious. We have to be very, very careful. And that's why I'm watching ETF demand, because we've had a lot of reset. Markets have really reset quite significantly. SOPR's reset, funding rates have reset. Overall, it looks extremely healthy. However, what we do need to pay attention to is that things can obviously unfold, and always having that dual direction. It can go in any way. Mr. Market will do what Mr. Market does. And the short-term holder cost base, as you can see, when we break through it, it typically precedes a bit of a longer price decline. Now, we've traded down to about 60K a couple of times this correction. 59.4 is where the short-term holder cost basis currently is. Historically speaking, once we get below that, now remember, MVRV can dip below and then recover, but that's where we really need to be quite vigilant and say, if it dips below and it just doesn't recover, you got to put some bear market goggles on at the very least, out of being, cautious and prudent. An idea that I've been playing around with, which I need to explore in a bit more detail, is what if we have one of these mini 2019, not a bear cycle, but something that's just like a really boring consolidation. It chops people up. People get too bullish, too bearish. And if you kind of close your eyes and came back in 6 months, we've gone nowhere, albeit lots of people got wiped out along the way. Something like that is a mental model I'm playing with, and I think is a feasible result, because what we've seen is all of these reset metrics have happened. Thumbs up, looks really good. But we haven't seen the follow through in demand. You saw that in the ETF chart. We're actually seeing a slight outflow. So yes, you can have a reset across the board, but the market needs to have the demand to come in and follow up and really, give it that punch moving forward. So this is definitely one of those tools I pay attention to each day. Sell side risk ratio. Again, we'll touch on this in more detail. High values typically occur near peaks. This is telling you that lots of coins that are being spent are coming from a very different cost basis. So up here at 20,000 in the 2017 bull, when this metric is high, it tells you that most of the coins being spent are coming from 200, 300, 1,000, right? $60. We've hit a level where it got a bit warm, but it hasn't fully exploded out the top. This is in log scale, by the way. So the difference between this point and this point is actually quite significant. We've seen this cool off. Again, reset looks good. That's what you want to see. You want to see these metrics resetting, which means more coins are transacting from within their recent cost basis. This is another one I track. I'll come back to this. I think it's probably a bit dense for this session and just being aware of time. And the other one I track is my gradient oscillators. This is all about momentum. The higher that these different metrics go, the more oomph, the more vertical, the more the price chart is moving higher, and it's moving higher against the backdrop of capital inflows. So higher is good. Lower is also not the worst in a bull because it's showing you they've got this kind of volatile swings. Down is what you will get in a correction, but it tells you on the different time frames. So at the moment, the 30-day is negative. So that tells me over the course of the next month or so, I'm not expecting kind of fireworks, right? Things generally slow down they do slow down from the 1 minute chart to the 1 hour chart to the 4 hour chart to the 1 day. The 1 day propagates into weakness in the 1 week, and then the week becomes in the month. So, things unfold from the inside out. I would like to see the 30-day break back above zero. That would be a sign that we've got a short-term momentum coming back into the market. We still have positive momentum on all of the bigger time frames. Our macro index is still plugging along, doing fine. It's in that shorter term, right? So in the short term, I'm not expecting fireworks in kind of either direction. It's kind of just chopping around. I'd like to see this break back above zero to give that first sign that we're getting momentum on the shorter time frames. Okay, so the Onchain originals. This is basically a collection of some of the oldest, most on-chain-esque, right? These are like OG on-chain metrics. There was a question about how I can kind of tell or how I describe where we are in cycles. What I've got here is the realized price floor model. We see it only during late stage bears. Capitulation, right? Real dark times when this happens. We've got the true market mean, which Dave Puel and I developed for Coin Time Economics. It is mathematically in the middle. It is the middle of the Bitcoin market. Long-term average, long-term median of 1. And then we have our upper bounds, which is vaulted price, also from Coin Time Economics at 71K. And we've got the MVRV +1 standard deviation, otherwise known as lots of people are in lots of profit, likely to take it at 80K. We generally get up and above these during bull markets, these green levels. When we get above the blue line, we're no longer in the recovery, bear market, PTSD phase. We're in the enthusiastic phase. Once we break up through all-time high, it's typically when we get up into these green metrics. It's not a topping signal because you can see we can get some distance through it, but it tells us that we're now in an accelerated regime. Volatility is much higher. People do start taking profits off the table. There's a whole bunch of dynamics here that we need to pay attention to. We kind of got up into that zone, but we're cooling off out of it. That's good to see. Now, we also obviously cool off out of it when a bear market starts, but it usually happens with a bit more volatility. It's a bit more, it's over and it feels like it's over. So far, it doesn't really feel like that dynamic is playing out. It actually feels like a very healthy, constructive reset. And again, less than 20% drawdown. Over the short term, it really is kind of anyone's guess, but I'm not expecting upwards, not with any kind of major volatility and fireworks. But I am kind of expecting chop. That wouldn't surprise me in the least. Okay, so for the very last question, how do I identify tops? Well, we've probably gone through quite a few elements that describe this. Sorry, let me stick around in my realized profit and loss. This one here is going to get rebuilt in the very near term. So this isn't its final form, but looking at things into what establishes a top, what actually creates a bull market peak? It's realized profit. It's people selling spot coins and overwhelming the supply. Now, what we can see is that generally speaking, the market has enough demand to punch through all of this profit taking. But when we get to very, very high levels, it's usually telling us that at the very least, we're going to have a correction, a cool down, There's a time factor to it. And bull market peaks generally get set when we've got an extraordinary amount of profit getting taken. Now, we had one of these. We've cooled off quite significantly, which again, good to see. We generally see it cool off quite significantly in all of these periods. The question is, do we get that second wave or that third wave or that fourth wave of demand? 2019, we didn't. It just collapsed, and that was kind of the end of it. And actually, if we load up the loss chart, again, top heaviness, when things don't go well, realized loss momentum rips to the upside because people are trapped. So all those people who are trapped, so here's the great irony. Losses is actually what tells us that the top is most likely in. Profits establish the top. Losses tell us when it's done because you got a top heavy market. All those top heavy metrics will drop below and short-term holder cost basis gets wiped out. So you get a statistically significant uptick in profits and you go, okay, cautious. When you see a massive uptick in losses, that's telling you that things aren't right. We can see here in the May 2021 sell-off, we went from basically no losses, everyone's having a great time, to the it ain't good moment, right? And you can see the difference in the regime here, right? These are all corrections, correction, 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 and then the final blow off top, correction, and then it sustains loss momentum. So again, it's one of those things we're looking for. What are the mechanics that establish a top? And then what has actually happened when all these profits get taken? You've got trapped buyers, and those trapped buyers panic. And that panic is what creates the bear. That is the true dynamic that actually creates the bear. And they're the kind of things that I'll be paying attention to. And to be honest, there's a lot of mechanics there. And that's, in many ways, that's what Check on Chain's all about, right? It's kind of my job to do all of this thinking for you, and kind of give you my insights and my opinions on what I think is going on. For those who really just want to kind of observe from the bleachers and just, have a decent idea of what's going on, I will also be updating this in the near term. So sit tight with me on this. I quite like Nupal by cohort and both of these two metrics. I think are just really clean ways to get a decent view, right? And when we're getting close to the top. Net unrealized profit and loss, Nupal, it's just MVRV in a different format, right? Here I've broken it down to different cohorts, the total market in orange, short-term holders in red, long-term holders in blue. What I'm looking for here is when all of them are in loss, this thing's going to flag and say, well, if everyone's in loss, everyone's nursing a 50%, 70% down portfolio, the speculators are gone. And there's a whole bunch of other things we can use to verify this, but as a very simple heuristic, you got to have serious stones to still be in the market when you're down 50%. And that's when you've got, who do you want to be in the trenches with at the bottom of a bear market? It's probably these guys. So this is the point of flushing everybody out. On the upside, we have when either one or two of these metrics or more go into a +1 standard deviation to the upside, meaning either the whole market and or short-term holders and or long-term holders are just way too fat and happy. When that's happening, as I was saying before with MVRV, people start to take profits. There's always somebody, it's a bit of a game of chicken. Someone's going to take profits first. Everybody knows that. They don't want to be the last guy at the table. They also may not want to be the first guy at the table because you scale out too soon. But these metrics are telling you when there's a lot of guys at the table who are having these thoughts. That's the way I would process this one. And I think it's a really, really useful tool just to give you a color band to say, all right, now I can start really thinking about what, my strategy is when things are getting overheated. And this one here, which I will do some updates to, is same concept. MVRV. Are people in a lot of profit? SOPR. Are they taking a lot of profit? Pure multiple. Are the miners making money hand over fist? And reserve risk. Are the hodlers distributing their positions? When all four of these light up, this thing will turn orange. So you can start to look for confluence between a couple of these different things. We're just looking for simple one standard deviations on either side. Very similar. You can see there's a lot of overlap between this and the Nupal chart. Looking at this from 4 different angles, you're just trying to get a bit of a confluence. So if you really are just looking from the bleachers on the sidelines, these two are probably going to get you pretty close, right? And why is it? Because human incentives. When they're in profit, they're going to take them. And when they're going to take them, the miners are probably also having a great time. And who's taking the profit? It's the hodlers, right? So these four, they speak to each other. They're related, but also not directly. Last thing, this is literally this chart but displayed in an oscillator format. So you can actually see which of these different components is really ripping to the upside and mooning, and kind of capturing all those levels. So anyway, conscious of time, yeah, went a little bit longer than I expected, but look, this is a bit of a free-flowing session. I'll kind of restructure these things, and I really hope you enjoyed it, and thank you so much for getting your questions in and for all your support. Right, if you're viewing this video, it means you're part of our paid subscriber base, and really, you've made my year already. So really, really appreciate it. And do let me know if you have any questions, comments on any of our Substack posts. We collect your comments over the course of the month, and we'll do one of these each month just to kind of catch you up. So anyway, thanks so much for tuning in for it, and I'll catch you in the next one. Cheers.